We have just 25 days left before the collapse of our economy, says Tucker Carlson. Let's listen to the clip.
And here's the reality. We have 25 days to avert economic catastrophe. Catastrophe is what will happen if we run out of diesel fuel. According to data from the Energy Information Administration, by the Monday of Thanksgiving week, that's 25 days from now, there will be no more diesel. So what's going to happen then? Well, everything will stop. That means trucks and trains and barges all unable to move. Farm equipment will shut down. There will be no deliveries because there will be no trucks. There will be no diesel generators. And then inevitably our economy will crash because everything runs on diesel fuel.
So is Tucker Carlson correct that we could have no trucks, trains, barges, farm equipment, diesel generators, or potentially even jet fuel, completely leading to catastrophe in our economy in 25 days? Well, if we review exactly what is going on in our diesel markets, we know the following: that Reuters is reporting critically low levels of storage and price spikes very likely within the next 6 months for diesel, unless, of course, the economy and consumption slow down. When we look at earnings calls or reports in general from companies about diesel consumption and demand, we get information like this. Bloomberg's NEF tells us that diesel appears scarce heading into winter thanks to underinvestment by the nation, exacerbated by refinery closures and disruptions. It's worth noting that we had about 700 to 800 wells drilling for oil in America right before the pandemic. That number is presently sitting at about 612 and has very slowly been ramping back up. Goldman Sachs is also reporting warning signs for a diesel demand and diesel supply. Exxon, who reported earnings this morning, also says that diesel demand continues to be strong despite downward pressure on gasoline demand. So gasoline demand is falling, but diesel demand from manufacturing and industry continues to be strong. On top of that, we have the lowest stockpile of diesel fuel we have seen since 1982 at just 106 million barrels, well below the seasonal average. A lot of this is, of course, being blamed on the Biden administration's closing of the Keystone pipelines, restricting of refineries, something very common, by the way, in California. When I ran for governor in California, one of the clearest and most immediate problems that I noticed, especially before coming in third place in the election, which I thought was a pretty good showing, but one of the problems that I noticed was California, as an example, is the kind of state that says, hey, you know what? We want to go green, but rather than taking our 1970s style oil and gas refining infrastructure and making it more efficient, let's just say we're not allowed to make any changes to the old crappy refineries unless those changes are 100% green. But wait a minute. You can't make a refinery 100% green. You could make it 30% more efficient by allowing improvements, but no, that would be California politicians supporting refineries. How dare you make them more efficient? Let them stay dirty, so that way people are truly forced over to electric and green products, which is substantially more expensive than if we would just reduce prices and increase supply by actually increasing the efficiency of the refineries that we already have. But of course, politicians, like those in California, like to stand in the way of that. It's not just California, though, or the United States. China is also scaling back production as their economy slows down. And we're seeing a really slow ramp up by companies like Shell, Exxon, Chevron, BP, even though they have record profits. But before we get into the next part, I want to thank today's sponsor, MooMoo. MooMoo is an advanced one-stop trading app that makes it easy for traders to do any and everything that you need. One of the main reasons MooMoo is amazing over other platforms is because they offer the ability to trade globally, meaning I could trade in Hong Kong and the US markets all from the same platform. No logging into other platforms. What a headache. MooMoo also offers industrial chains which provide a detailed picture of trending industries like semiconductors or EVs. And I don't like headaches. That's why I like MooMoo, keeping things simple. They give you access to heat maps as well, so you can easily visualize trends from the entire market at a single time. And trust me when I say these types of visualizations offered by MooMoo make understanding market trends so much quicker. MooMoo also gives you real-time quotes, so you can be sure the price you're seeing is an up-to-date one. This feature is especially useful when you want to make sure you have up-to-date pricing. Again, earnings, foreign markets, you name it, you want up-to-date pricing. And after hours is a great time to have up-to-date pricing. It also helps you predict open market direction and allows you to act quickly on news that occurs when the exchange is closed. So sign up via my link down below, open a new MooMoo trading account, and get $10 cash back for every $100 deposit that you make, up to $50 totally for free. Use the link down below. Now, these record profits you'd think might be leading to record investments into more rigs, but that's not the case because a lot of these oil and gas companies know that these record profits won't last. So what are they doing? They're using the excess capital to pay off debt and pay dividends to their shareholders to prop up the stock so that if they ever need to do a capital raise again in the future, they have a higher or larger well to draw from for capital raise. So buybacks and dividends and debt reduction are a big priority of a lot of the refining producers right now. And some of this, of course, has to do with our political environment as well. That does make it harder for oil and gas companies to actually increase localized production. However, and in the meantime, Exxon's earnings for the year are so large that if you combine the earnings of Amazon, Procter & Gamble, and Tesla, all three of their estimated earnings combined for 2022 are expected to be less than the combined earnings of just ExxonMobil's divisions. This is remarkable. In fact, these companies have made and reported so much money in profits that just looking at Exxon, they have just reported the highest profit in 152 years, and Chevron just had its second largest quarter ever. So, what do we think? Is this demand going to subside? Well, not according to refinery CEO from the company Saras. This refinery CEO says demand is extremely robust for 2023, and they've, quote, been able to sign contracts for 2023 at very high premiums. So, obviously, refining productivity is not as high as it should be to provide the actual diesel resources we need. And Bloomberg is reporting that we expect diesel prices to jump while gas prices actually are expected to fall. So, with all of these factors leading to a massive shortage of diesel, is it true that we're likely to be 25 days away from collapse and trucks and trains and barges just won't have access to diesel anymore? Well, this is my opinion, but my opinion is no. We will not run out of diesel. That is my expectation. And the reason we won't run out of diesel, in my opinion, is we'll simply see the short-term price of diesel spike to high levels, making the inflationary problems in shipping, in manufacturing, and in freight worse for all of the companies in America and worsening and prolonging our inflationary disaster. Remember, there's an old economic theory that has always been proven correct, and it's likely to be the same for diesel. And that theory is we will never run out of landfill space. That's the argument. The argument is we will never run out of landfill space. And individuals say, how could that be possible? At some point, we'll just have so much trash we won't have landfill space anymore. And the argument is simple. Prices will go up to such a high level that people will simply by price be compelled to recycle more or create less trash by either reusing or otherwise, maybe even burning their trash, whatever they need to do to get rid of it. The same is true when it comes to a commodities demand like diesel. If diesel shortages are so strong, you might see local diesel rationing like you see in states like New York or areas that really rely on diesel for heating. However, you're unlikely to see an impossibility of actually getting diesel. You'll just see the price go up substantially. So a price spike could happen, which is inflationary and bad for our economy. Will we actually run out? Probably not. Could there be government interventions that set price ceilings? Yes, but generally price ceilings only exacerbate supply shortages as the market then can't reap the benefit of higher prices, hopefully leading to more investment. But then again, politicians might say, hey, higher prices haven't been leading to more investment at oil and gas companies now, so why would they later? Either way, do I think we're about 25 days from collapse? Absolutely not. Do I think we've got a big red flag coming up with massive diesel shortages and a likely spike in diesel during this winter? Absolutely, yes. And will that contribute to headline inflation? Absolutely. Will it contribute to core inflation? Possibly. That's because even though gas and energy are stripped from core, those increases in freight and essentially manufacturing expenses will flow through to goods and service products in the actual core sector of CPI, potentially helping elevate CPI prices. And this is unfortunate given that we have our fingers crossed for inflation to be coming down, not going up. So, Tucker's on the right track. Are we 25 days away from collapse? I personally don't think so, but he's not wrong about some of the things and concerns that he's bringing up.